Welcome back to the channel. I'm going to start getting into a little bit more specific detail around how to value your business. So this could be if you go down the DIY, the do-it-yourself track, or if you're interested in having a professional do it for you, this is how I would conduct a business valuation as a business broker. And many of the appraisers will go through this and some additional information. And let's get started. What we're going to start with is this self-assessment walkthrough. So I'm going to take you through a variety of different factors that are that have an implication for the business value, whether it be increasing the business value or decreasing the business value when a buyer assesses risk and benefit to a company. The first section that we're going to go through is the financial results of the company. Most buyers are going to look at your financials, they're going to look at your track record, and they're going to look at the future potential of the business. That's what's going to give them really that initial excitement to buying a business. They're buying cash flow. So the first section that we're going to do is on this, we're going to scale. We have a scale that we're going to work with. We're going to start at 0, which is Zippo, and 4 at the upper end. So here, for historical profitability trends, look at the past couple of years' worth of your business. Going back 3 years or 2 years, has it been increasing in profitability year over year? Don't worry so much about month over month, but if you look at 2020 to 2021, 2022, 2023, and so on, is the profit increasing and the gross revenue increasing? The profit is more important. Much more important. These lower middle market businesses and small businesses are valued as a multiple of the profit, not the revenue. So at this section, grade yourself between a 0 and a 4 on what your profitability looks like. The 4 is something that's growing 25% or 30% or 40% year over year profitability increases or more. If your business is in the 5% growth range, then you're probably a 1, 1.5. If you're in a 15% growth range, you're probably 3, somewhere around there. So use that as kind of your guidepost. 25% growth year over year and more, you're at 4. And then if you're not growing at all, or if you're decreasing in profitability, give yourself do an honest assessment. Pretend you're in the buyer's seat. They're looking at everything with a little bit of skepticism. They're looking at things with concern, with risk, in their eyes. And so this self-assessment is not something that you can just do for yourself, but put yourselves in a buyer's shoe. That's what I do as a part of my my business valuation. The next one is historical revenue stability. So this is going to show fluctuations in your profitability and your revenue. Is it stable? For instance, if you had a big couple of years in 2020, 2021 with COVID, and or 2021, 2022 with COVID and the pandemic, and before that, it was like things were really like simple, and easy. And then you have a big spike in 2021, and then a down on 2022, and 2023 is kind of like coming up a little bit. That's what we're looking for with revenue stability. If it's just every year, year over year, just a nice line up and to the right, give yourself a stable growing score of 4. If there's fluctuations all over the place, give yourself a 0 or a 1. Just be honest with yourself around what your stability looks like. The big one is the trailing 12 months, the last 12 months compared to the previous fiscal year. So if you're watching this and it's June of 2023, you're going to be looking at August 2022 through June of 2023, and that's the last 12 months for you. And you're going to compare that to the whole fiscal year of 2022. Was the trailing 12 months, the last 12 months, is it higher than the previous fiscal year? If yes, give yourself a 4. Good job. If no, then just be honest with yourself and give yourself a graded scale number less than that. Likelihood of bank financing or seller financing. So if you are a small business and you're doing between $500,000 and $5 million in annual sales, good chance you might be the business might qualify for an SBA loan. SBA 7A helps a business acquirers acquire businesses on a 10-year note. Right now, the interest rates in June of 2023 are about 11%. They have fluctuated since I've been a business broker in 2020 through now from 6% to 11%. But they all use the tax records of your business as the foundation for what a buyer can qualify for. And if you've got 2 years worth of growing profit and taxable and good taxable profit on your tax returns, there's a good chance that that there's a high likelihood to be able to get bank financing. So give yourself a 4. If you don't have tax returns, if you are selling a business that's like a division of a larger business, and that division doesn't have its own tax returns, and it's a smaller business, going to be difficult, if not impossible, for it to get any financing. Give yourself a 0. If you're a bigger business, if you're selling for over $10 million, and you've got a stable record of income that is verifiable with the quality of earnings or with other tax returns, that a capital markets banking partner or lending partner can fund on, bingo, give yourself a 4. This is really important because right now, almost all of these deals are getting some kind of financing, and that's what buyers are doing. If it's over $1 million, you can bet a buyer's trying to figure out how to finance it somehow. Our next one, what's the risk in the business model look like? Are you selling a non-essential or an essential product or service? Is it low risk or high risk? If you have a very low risk business, if it's essential to a large variety of consumers, give yourself a 4. If it's a very high risk type of product or service, give yourself a 0 or something in between. I see a lot of averages come in between 1, 1.5, 2, 2.5, 3. So this isn't an all or nothing. You don't have to give yourself a 0 or 4, and that's it. Be honest with yourself as to what's your risk. If you were somebody outside of this business looking in at it, how would they think about the risk? Sometimes it's a tough one. We have to do our best guess and then go out to the market and actually get feedback from buyers. The M&A process of listing and selling is not just a one-shot, swing for the fences, you win or you die. It's not like that at all. It's very iterative. I'll spend a lot of time taking the business out to market, getting feedback, coming back, adjusting that feedback, going back out to market with new marketing, new materials. That happens almost in every business. Our next one is the history of recurring income. Do you have a subscription? Do you have annual contracts or monthly contracts for your clients? If you're a products-focused business, you're selling physical goods, if there's any kind of subscription or recurring income, if you're selling like some kind of a bolt-on or upsell that's like a VIP club or something like that, be sure to demonstrate as much of that as you can in your financials and break it out so that we can see it. It needs to be really easy to see. What I try to do when I'm listing a business is I'm trying to make things simple for buyers. We want to get to a quick yes. Yes, give me, take my money, give me your business. That's exactly what we want. So the easier we make it for people, the easier it is for them to say yes. So if we can break out the revenue on your income statements that show point of sale income versus recurring income. Oh my God, I love that. I love it. So make sure you do that if you can. In this section, give yourself a score 4 if you've got more than 25% recurring income. That's a great grade. More than 25% of your total income, if it is recurring income, give yourself a 4. And then scale down from that. If you have no recurring income, just give yourself a 0. We'll move on to the next one. Annual contracts in place. So if you are a B2B company and you have a contractual relationship or you just have a relationship with your clients, get contracts in place. Try to get annual contracts in place. This is showing the buyer what they can expect the revenue to continue to look like. It's almost a guarantee. It's not. Nothing's guaranteed, but it looks a whole lot more like a guarantee than if you're just working month to month for people. This is specifically important if you're a digital marketing company or you're providing other digital services to other businesses. Do the best that you can to try to get contracts in place that can show the buyer that they're not only going to get the income from the last 12 months, but there's an almost certainty they're going to continue to get that moving forward. Give yourself a 4 if all of your contracts are annual. Give yourself 0 if little to none are, and then give yourself something in between if you're right in the middle. Just take the number of contracts you have, divide it by the number of clients you have, and then figure between 4 and 0, and then give yourself a sliding scale. If you're only at 25% of your contracts or annual contracts, you give yourself a 1. If you're at 50%, give yourself a 2. If you're at 75%, give yourself a 3. And if you're at all of them, give yourself a 4. Length of time the business has been in operation. So older businesses sell for more money. They show less risk for buyers. If you've been in business for 5 or more years, give yourself a 4. If you've been in business for less than 2 years, less than 1 year, give yourself a 0. If about 2 years, give yourself a 1. 3 years, 2. 4 years, 3. 4 or 5 years, give yourself a 4. The macroeconomic conditions. How is the business affected by the economic conditions of today? Is there no effect? Give yourself a 4. Are you in deep trouble right now and the business is in a catastrophe situation? Then give yourself a 0. Your profit margin. If you're over a 25% profit margin, you would rate a 4. If you're under 10%, give yourself a 0. And then scale yourself in between. Customer concentration issues. If you have an abundance of customers with no concentration issues, you score a 4. If you've got very few customers, give yourself a 0. If you fall somewhere in between that, do like what we did with the contracts. Just take the number of customers that you have and just scale it in between. Where do you think you fall? Between a 0 and a 4. The quality of financials, including verifiable add-backs. So one of the most important aspects of selling businesses is having really clean, simple financial statements, income statements, balance sheets, inventory reports, client reports if you're a B2B company. What every buyer is going to look for, as soon as they look at the offering memorandum or the teaser, they're going to start looking at your financials. If you've got something that can be exported out of QuickBooks or Xero or another accounting system and everything is up to date and it's properly categorized, then give yourself a 4. If your books are behind, if they're not accurate, if they need work, give yourself a 0. This is a tough one. It is really hard to sell businesses that don't have good financials, especially over $1 million. For the little businesses under $1 million, that's a whole different picture. A lot of those businesses sell without financials, but it's also a much different valuation too, usually much, much less. So in this instance, if you don't have a bookkeeper, if you don't have a CPA, if your books aren't updated, if they aren't properly categorized, all of your expenses and revenue going into the associated bank accounts and reconciled, that can all be exported out of QuickBooks, I highly, highly recommend you start that process as soon as you're done with this video. You shouldn't be running your business for much longer without having that done, much less thinking about selling your business. So please, 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 if nothing else you take from this video series, get your bookkeeping up to date. Hire a CPA or a bookkeeper to do it for you. They're easy to find. They're all over the place. They're a dime a dozen. It is not complicated work. I pay a gal off of Fiverr in India to do all my bookkeeping and my reconciliation as $30 a month. Now, I don't have a zillion transactions. I do 10 to 15 of these transactions a year, and I've got regular expenses associated to that, so it's not very complicated. But that gives you an idea. I see some clients paying somewhere between $300 and $700 a month. More complicated, bigger businesses, maybe $2,000 a month, $3,000 a month. Those are for like multi-million dollar businesses. I'm talking $10 million or more per year in annual revenue. That's when you probably need to have somebody part-time or full-time doing that. Give yourself a 4 if your books are professionally maintained. Give yourself a 0 if they are out of date, not accurate, or non-existent. If your product or service, if you've got availability around the performance data, so if you're selling physical products, if you've got a CRM, Shopify, Amazon, Seller Central, stuff like that, which has available data around the sales at a SKU level of your products, that is awesome. Keep as much of that as you can. We'll get through the process of exporting that and tailoring it for buyers. If you've got very strong and transparent data that can be reviewed at a product or service level, give yourself a 4. If you don't have that data available, give yourself a 0. And if you are a B2B customer or a B2B company, then keeping that again, your client reports, start date of the client, end date of the client, if they're ongoing, what the monthly fees are associated to that client, what the average fees and revenue have been from that client. I've actually got a report for B2B companies that if you're curious about what that needs to look like when you go to sell, you can message me below, click on the link below, and you can communicate with me directly. Leave a comment on this post, and I'll get back to you. leave a comment on this video and I'll get back to you. And be sure, if you found any of this valuable, hit thumbs up, click on subscribe, click on the bell so you can be alerted when I have these new videos coming out. This is the beginning of a sequence of business valuation videos that I haven't found any of this online. So I'm the only one that's ever done anything like this, specific to lower middle market and small businesses between $1 million and $150 million. If you appreciate this, I would appreciate it if you give me a thumbs up. The next sequence of video that we'll get into is around the sales and the marketing and your industry. Again, if you found anything valuable here, I would love a thumbs up and click on subscribe below. If you've got any questions, make sure to leave them in the comments below. If you're curious about a business valuation and where your business is at now, I'd be happy to perform a free business valuation for you. You can click on the link below in the description and I'll get right back to you. Thanks for watching today.